from FS Securities, and we have a particular stock that we picked up from our research, and it's actually for the aggressive and the very aggressive trader, and the company name is CLEARVIEW. CLEARVIEW, as a matter of history, used to be the NRMA life insurance in 1976, and of course they changed the shareholders and eventually became CLEARVIEW. They offer financial advice to help people to understand their goals and how to get there, and of course it's like financial planning and to work out about your life insurance, your wealth, and all the stuff that protects you for the future when you retire. Okay, well, the company at the moment is trading at 27 cents. We have a target approximately 37 cents, and of course we always put trailing stop losses, maximum, not minimum, maximum 20%, approximately down to 22 cents or higher. From our research, we have a neutral recommendation for the investor. We have a neutral recommendation for the conservative trader. But if you are aggressive and very aggressive, it is a bullish performance for you. And what I mean by aggressive trader, somebody who trades in and out within a week, and the very aggressive trader is somebody who trades in and out within days. All right, well, let's have a look at the chart. This is actually the 50-week chart. It came down all the way from, if you look at the 100%, it actually managed to drop nearly 40%, actually more than 40%, and started to recover. If you look at the last 30 days, it's starting to move up from 21 cents to 27 cents. Looking at the weekly chart here, you can see that the parabolic stop and reverse is bullish. The stochastic down here is bullish. And the 9-week moving average is below the 21-week moving average, and that is actually neutral. This whole thing for the weekly is neutral, and that's why you can see here for the investor, and I meant the investor is somebody that we look at the charts monthly and weekly. As long as the monthly provides a signal, either bullish or bearish, the signal is passed on to the weekly, and as long as the weekly 5 indicators out of 8 conform with the monthly signal, we trade. However, we have neutral because we don't have a confirmation in the weekly for the monthly. However, for the aggressive and the very aggressive traders, we look at shorter term charts. We look at the weekly and the daily, and we start with the weekly. We look for the 5 indicators out of 8, and obviously in this case it's bullish for the weekly, and of course we've got 5 bullish for the daily. And that's why you can see here for the conservative, for the aggressive trader and the very aggressive trader, it's actually bullish. You look at the daily chart, the 9-day moving average is above the 21, that's bullish. The parabolic stop and reverse, those dots below the candles, are bullish. The stochastic, somehow it's bearish down here. But we've seen some very healthy volume of recent time. And we actually look at the MACD, it's slightly neutral. The DMI is bullish, and the RSI is slightly bullish. It's not really a very strong recommendation, but it's something that we believe is likely to go to 37 cents. You look at Morningstar, they put a fair value estimate about 38 cents or 37.6 cents. And we can see here that we are 33% below the fair value. There is, of course, a lot of doubt, very high, and the financial health of the company, of the country, is actually strong. For the sector is moderate, and for the industry is moderate. and they had some final share buyback notice, so they're buying their own shares, and that maybe they can actually improve the price of the shares. Now let's have a look at the corporate results. This is actually directly from the corporation itself, from CLEARVIEW. You can see here it's CLEARVIEW.com.au, and it's a document provided for the shareholders. You can see that the life insurance has dropped 27%, the wealth management dropped by 19%, financial advice increased, and net profit after tax, they've got 10.2 million versus 13.3 million last year. This is half year. And reported NPAT, which is normal profit after tax, 9.8 million. So it's a company that's making money, but obviously it can make and should make a lot more. Earning per share is 1.5%, not a great deal, actually 14% below last year. But remember, we've got here the coronavirus pandemic, and of course people are not really doing things that they used to do normally. Further information coming from Yahoo. Market capitalization, you can see here this is not a small company. It's not a large company, but it's got 182 million market capitalization. And the price earning ratio is too high, obviously, for our liking, but then maybe there is expectation that there could be profit in the future. The profit margin, very small, negligible. Return on asset, 3%, return on equity, 6.5%. You can see that they're generating reasonable revenue, 527 million of revenue. And TTM, as you can see here, that's trailing 12 months. Earning before tax and depreciation and appreciation, making $118 million. Okay, well, more information coming from the Hub Group. You can see here the cash equivalent. They've got more cash in the bank, but then they've got liabilities. The debts, 1.9 billion. That's a lot of money. So total liability is 2 billion. Total asset is 2.5 billion. So there are stockholders' equity of 444. So that's all from us here at FS Securities. Again, this is actually a transaction for, or a trade I should say, for the very aggressive trader. Happy trading and good luck.